The final bell has rung on a frantic Monday, February 23rd, and the ASX 200 has officially ended in the red. We've spent the day digesting a massive 15% US tariff shock and some heavyweight earnings reports that have sent specific stocks flying. The big question at the open was whether the 9,000 level would hold, and it was a nail-biter. I'm Jay. Let's break down the closing numbers. The ASX 200 finished the day down 0.61%, closing at 9,026. We saw an early attempt to rally, hitting an intraday high of 9,012, but the selling pressure intensified after lunch as the reality of those 15% universal US tariffs started to weigh on our exporters. We held the 9,000 psychological floor for now, but only just, with the index dipping as low as 9,010 during the session. Reporting season continues to be a game of two halves. The winner, NIB Holdings. What a day for the health insurer. They reported a massive 22% surge in underlying operating profit, hitting $129 million for the half. Despite the broader market gloom, investors piled in, encouraged by their 13-cent dividend and strong premium growth. The mixed bag, Ampol. Ampol's statutory profit actually fell 33%, but the market focused on their RCOP EBITDA, which jumped 20% to $144 billion. Their convenience retail shops are the star of the show right now, though the share price faced some gravity today, closing down about 2%. The struggler, Lendlease. A tough day for the property giant, reporting a statutory loss of $318 million. While their construction backlog is growing, the market isn't convinced on the turnaround yet, sending the stock down over 3% toward its 52-week lows. In the pits, it was all about the big dirt. Iron ore has officially broken below that $100 support level in some markets, trading around $99.30 a ton. This is a 28-week low, and it dragged the big miners down with it. However, gold continues to be the hedge of choice. It's sitting near 5,160 USD, up nearly 1% today. If you held Evolution or Northern Star today, you likely outperformed the broader index. Looking ahead to tomorrow, the focus shifts to the January CPI data and any further fallout from the U.S. trade desk. If the 9,000 level breaks on the open tomorrow, look for the next support at 8,950. My takeaway? The quality earners like NIB are being rewarded, but the macro tariff clouds are getting darker. Before you go, did the NIB results surprise you, or are you more worried about iron ore hitting double digits? Let me know in the comments. Hit like, subscribe, and I'll see you at the opening bell tomorrow.